A lot of craziness going on, right? Excitement about Silicon Valley Bank and the financial markets, mortgage rates, etc. And so I'm going to tell you in very simple terms what happened. First of all, know that if I deposit $100 into a savings account in a bank, the bank actually keeps $10 of that, and then $90 goes out. They try to invest it, right, to make money. Silicon Valley Bank purchased $80 billion in mortgage-backed securities back when rates were, call it, 3%, which means the coupon for that is actually 2%. So they had $80 billion at a 2% coupon. Currently, you can invest in options such as short-term 5% treasuries. Jim Cramer incorrectly stated that SVIB, or Silicon Valley Bank stock, has room to run. And what happened was investors started taking a notice of the stock, and they began seeing cracks, if you will, in the armor there, and began shorting the stock. Pretty soon, people are pulling all their money out of this bank, and what they noticed was they thought that this 2% coupon at the date of maturity, right, has a $12 billion plus side. But when they do mark to market today, when we compare that 2% to the 5%, they actually didn't have a $12 billion gain. They had a $15 billion loss. So Silicon Valley Bank was forced to sell $21 billion at a $2 billion loss to investors. And they noticed the remaining $13 billion in unrealized loss, and the bank was then insolvent. So then what happened after Janet Yellen said this is not going to be a bailout, the Fed and the FDIC did jump in Sunday and is allowing the bank to trade underwater securities at face value, preventing a huge collapse. So what this is considered is a quasi bailout. So I'm Garrick Werdmuller. Anything you need about mortgages and things of that nature, I'm here for you with questions. Please don't forget to forward this around so people can understand what's going on, and I appreciate you. Fresh Home Loan, independent mortgage brokers that work for the people.